Hello and welcome. In this lecture video, we'll continue our discussion of product versus period costs, do a few quick check problems revolving around product and period costs, and then talk about how the balance sheet changes a little bit in terms of manufacturing companies. Okay. All right. So we have this quick check problem right here talking about these different types of costs, and then classifying those as direct materials, direct labor, manufacturing overhead, or period. And then, of course, this continues on to the next page over here. All right. So I'm going to do the first one for you. I'm going to do a few of these for you. And then I want you to pause the lecture video and do the rest, and then come back and check your work. Okay. So we have insurance on factory building. Remember, the key word there is factory. And we know that insurance on factory building is an indirect cost, therefore it's manufacturing overhead. It's not direct materials, it's not direct labor, but it's not a period cost. It's not administrative period cost because it says factory. If this said insurance on corporate headquarters, it would be administrative, which is a type of period cost. Salaries of machine maintenance personnel, that is also manufacturing overhead. It's not direct labor, it's manufacturing overhead because these maintenance personnel could be working on a whole bunch of different machines that service a whole bunch of different products. So it'd be difficult for us to trace their salaries to specific products. Sales representatives commissions. Keyword sales, that is a period cost. Transportation costs for units sold. This is also a period cost. It's marketing and selling. This is marketing and selling, and so is this, which again is a subtype of period cost. Why is this marketing and selling? Well, look, it says all costs to secure the customer orders and get the product to the customer. This is getting the product to the customer. Okay. Continuing on, we also have rent on corporate headquarters, and I'm going to bring those headers over here. Manufacturing overhead, and then period. Rent on the building, factory building, which is manufacturing overhead. What I was thinking was, is if it had said rent on corporate headquarters, that would be period. But this is rent on the factory, that's manufacturing overhead. Transportation costs on raw materials, we would include that in our direct materials costs. Okay. So what I want you to do now is pause the lecture video and do the rest of these, and then we'll come back and check your work. Okay, hello and welcome back. So we have our screws connecting seats to legs. That is indirect materials, which falls under manufacturing overhead. Fuel costs of heating administrative. The key word is administrative, which means it's a period cost. Property taxes, look at the keyword factory. That means it's manufacturing overhead, not an administrative period cost. Depreciation on sales reps' cars, that is a marketing and selling cost, period cost. Salaries of workers putting stools together, that is direct labor. Okay, that's assembly line labor. And then the wood used to make the stools, that is direct materials right there. In terms of when do these costs, manufacturing costs, these are product costs, non-manufacturing period costs. When do they show up on the income statement as an expense? That's what expense means. When do they show up on the income statement as an expense? Well, these show up in cost of goods sold. So remember what we have. We have sales minus cost of goods sold gives us GM, gross margin. So sales, COGS minus cost of goods sold gives us gross margin or gross profit. And then we subtract out our operating expenses to get operating income. Okay, and I'm stopping there. Subtract out non-operating gains and losses, taxes, interest, and so on and so forth to get down to net income. But I'm stopping here at operating income, okay? just to illustrate these concepts. So direct materials, direct labor, manufacturing overhead show up right there in cost of goods sold on our income statement. Period costs, such as general administrative costs, show up in operating expenses right there. Okay? These show up in cost of goods sold in the period in which they are sold. So let's say that it cost me $100 to make a table. And that $100 is composed of the direct materials cost, the direct labor, and manufacturing overhead. And let's say that I incurred those costs in 2019. Okay? But let's say I didn't sell the table until 2020. When does this $100, which it cost me to make this table, when does it show up in cost of goods sold? It shows up in cost of goods sold in the period or the year, the accounting period, in which it was sold. So if I sold it in 2020, it shows up on the income statement in 2020, not in 2019, even though I incurred the cost to make the table. I paid the labor, paid for the materials, had incurred the manufacturing overhead in 2019. I incurred it in 2019, but I didn't sell the table until 2020, so therefore it does not show up in cost of goods sold on the income statement until 2020. Okay? Where does it show up in terms of 2019? It shows up in ending finished goods inventory. And that's something we'll talk about in another lecture video, the next lecture video. It shows up in ending inventory. So it says, this is a table that I have available for sale. It's finished. It's completely done, but I haven't sold it yet. And the cost of that table, cost for me to make the table, was $100. So it shows up in my ending inventory in 2019, the value of $100. Then when I sell it, it moves from ending inventory to the income statement in the form of cost of goods sold. I incurred the cost in 2019, but it doesn't show up on the income statement. That is, it's not expensed until 2020. So these costs are expensed in the period in which those goods are sold. These costs, why are they called period costs? But because they are expensed in the period in which they are incurred. So if I have $50 worth of commissions for my salespeople, and I have that in 2019, somewhere in 2019, buried in these operating expenses, I will have $50 worth of salesperson's commissions. It doesn't matter when I sold the goods. It matters when in the period in which those expenses are incurred. If they are incurred in 2019, that means they show up in the income statement in 2019. That's different than these costs. These costs stay in ending inventory until they're sold. And then once they're sold, they move to cost of goods sold in the period in which they are sold. These show up on the income statement in the period in which they are incurred. That's why they're called period costs. Okay? So when we look over here at the next page, we have some more example cost classifications. If we have a cost item right over here, bicycle tires, that's a variable. That's our direct materials. That's direct materials and it's a product cost. Okay, it's not period. Wages of assembly line workers would be direct labor. That's variable. That's direct. It's product cost. Advertising. It's fixed. Advertising we treat as a fixed cost. It's indirect, and it's a period cost because that's selling and marketing costs. That's not product. Production manager salary, that's indirect labor because it says salary. That's why it's fixed. We're assuming hourly wages here. That's why it's variable. So salary, fixed. That's under manufacturing overhead. And it's a product cost, which means it does show up in cost of goods sold and ending inventory. Office depreciation, the key word there is office. That means it's a period cost. Depreciation we treat as fixed. And it would be also considered indirect. Okay? We have some other terms right over here, such as prime costs. In conversion costs, by definition, prime costs equal direct materials plus direct labor. And by definition, conversion costs equal direct labor plus manufacturing overhead. That's just the definition. Okay? So when you look over here at our quick check problems, I want you to pause the lecture video and do these quick check problems 1 and 2, and then number 3 on this page, okay? And then we'll check your work. Hello and welcome back. Let's see how you did. So this first quick check problem, which of these would be considered period rather than product? Well, manufacturing means it's product. We know direct materials is product. Production means it's manufacturing overhead, direct materials. Those 3 are product costs. These 2, look at the keyword sales, corporate, that means period. Okay? Which of the following is a period cost? Well, we know raw materials, that's materials, so that's direct materials and indirect materials, those are product costs. Manufacturing, look at the keyword, manufacturing plant maintenance, we know that's manufacturing overhead. Wages for production, that's a keyword, that's telling you it's direct labor. Vice President of Finance, that would be a period cost. Which of the following is a direct materials cost? This is indirect labor. This is manufacturing overhead. This is direct labor. Steel for a shipbuilder would be direct materials. Okay? So let's talk about the balance sheet presentation of our product costs. So manufacturing companies have 3 inventory accounts. The first one is raw materials, okay, which contains the cost of direct and indirect materials. The next one is work in process, abbreviated WIP, and I abbreviate this one quite a bit when I'm writing just raw materials. Okay, WIP is the cost of the goods, our products, whatever we make, not yet completed at the end of the accounting period. Okay, and so it's important to understand what I mean by cost here. What I really mean is the direct materials plus the direct labor plus the manufacturing overhead attached to those goods that we have been working on during the accounting period, but we have not yet finished at the end of the accounting period. So think of if we're making a table, for example, and the table only has 3 of the 4 legs done at the end of the accounting period. That table is not finished. It is a work in process. Okay? So then the last one that we have, the last inventory account that we have is called finished goods. Finished goods. Okay? And that is the cost of the goods completed during the accounting period but not sold. So, and remember what I mean by cost, I mean direct materials plus direct labor plus manufacturing overhead. So the direct materials, direct labor, and then the overhead attached to those goods that we completed but we did not sell during the accounting period. So let's say we made a table and it cost us $100 to make this table. At the end of the accounting period, it's just sitting in our storeroom ready to be sold, but we haven't sold it yet. So it's not sold, but it is finished, so that's why it's called finished goods. Raw materials, work in process, and finished goods are all inventory accounts for a manufacturing company. That means they are classified as current assets on the balance sheet for a manufacturing company. Thank you.